man.
Good morning, Tommy. We have some interesting things shaping up as the dollar had a big rally yesterday, and it's starting to seem like it wants to maybe have a little bit of a retreat. So let's kind of get into the major things that we have to watch to see how things are swinging. So
Let's do it. Where are we going to start, man?
I'm sorry.
Sorry, I said let's do it. Where are we going to start?
So we'll start with let's start with gold, which is something you guys watch a lot.
Sure.
It failed to make a lower move low yesterday and today, so it's hovering just below new move lows. If gold holds and starts to make another run to the upside, that's a big thing as far as the dollar starting to be a short-term bear. Oil is neutral. We know the tanker's out of the Suez Canal. Things are getting back into flow there. Oil is still long-term is a bull, but right now I think that one's kind of off the table, at least in the short run. Now we have interest rates. They're doing the same thing that gold did. Yesterday's low is key. They almost made a lower move low, but they didn't. So now they're slightly positive today. If they start to trend higher, meaning lower rates, then we may have a short-term turn in the dollar, okay? Now, the low from yesterday's Treasury bonds is huge. If we fail there, we make new move lows, this is off the table. So now what does that mean for the currencies? The yen and the Swiss right now today are the ones that are falling to the dollar. The other currencies are stronger against the dollar, but only slightly. The yen, I mean, remember we've been talking about the 111 price target for the past month and a half.
I was waiting to get to the yen, Teddy. Quite a chart. Go for it. Yeah.
So now the thing is, remember how when we started blowing off these highs a month and a half ago, they were accelerating at an incredible rate. And that's why I think that you have to look at, like I said, started with the interest rates and the gold, okay, and the oil. Should we get a bounce in gold and a bounce in interest rates? That would mean we're setting a higher move low, not necessarily going to be a big rally, but that would help to send a little correction in the dollar. The currencies that are strong versus the dollar is basically all the other currencies, except they're not making big moves. And remember, we had that sell signal in the Australian dollar, US dollar last week with the head and shoulders. It's still bearish. So I have a downside target there of 75 even to even 73.75. Now, this is if the dollar trend continues to be strong. If we get this short-term reversal because of gold bouncing and oil staying static and interest rates going down, then I think that's off the table. Then you'll see a rally in this. We won't see the market hitting support in places like the Australian dollar and like the New Zealand dollar as well. So those I'm still a little bit bearish on, but only if, like I said, the dollar keeps on following through to the upside. The U.S. dollar yen, I mean, the targets now are ridiculous. So, I mean, now we're looking at 113.5 to 114 even, which I would say would, if the dollar gets a little bit of a turn, probably will slow down. If oil starts to retreat, interest rates start to go down, and if gold gets a rally, the yen will probably have a sell-off. Now, remember, I always remind your listeners how we have flight to quality. And this is where this scenarios come into place, because the yen is a flight to quality currency in Asia. It's getting pounded. Europe has lockdown issues that continue to grow, so the Swiss is getting pounded. Okay, so these are runaway rallies, but they are good for a little bit of a correction. But I would not try and jump in front of these things. I'm just telling you, because they're way too strong. Now, if you had like I said, a big explosive rally in gold and a big bond rally, and maybe even another sell-off in oil, then you could probably see a decent correction in the U.S. dollar yen and even the U.S. dollar Swiss, maybe slightly. But I don't see that really coming. I think it's more of a short-term maybe pause that you'll get on those two. So don't jump in front of those freight trains. Now let's get to the pound and the euro, the big guys.
Okay.
The pound is still short-term bearish, and especially as oil stays neutral, it's going to be hard for the pound to catch a rally, because their lockdown issues are severe as well, So only if you get a big rally in oil, in which case then I would say you'd start to become bullish to pound again. But right now I have a downside target in the pound of $1.3540. Okay. I think that's going to be an extreme for as far as how far you can get. If there was a big sell-off in oil, which I don't see, I'm still looking for $100 a barrel over the next 6 months or so. That would be the thing that would take that, Okay. Now the euro, this is a tough one, because this is a falling knife scenario with flight to quality currencies like the yen and the Swiss getting pounded, and with gold not holding up. It's really hard for the euro to gain strength versus the dollar, especially with the lockdowns. So I still have a downside target of around $1.1620. I don't think you're going to see much more than that. I think we'll start to see some stability. You got to remember, unemployment is a big issue. So if we get good claims tomorrow, and we've been talking about this, how over the next few months, unemployment is a big deal. It's a bond number. So, and that means that if we do get favorable claims, if we start to see a bigger downtick in the unemployment number itself, then this will start to cause a bond rally. This will start to cause a gold rally. This will start to basically take the dollar strength out of the equation. So we still have to see how these pan out. But the bond numbers are big now, especially like the unemployment.
Yeah, interesting. We got ADP this morning, right? We get non-farm payroll on Friday, even though the main markets are closed, it looks like, for Good Friday. But yeah, I agree. We talked about it last week and talking about, the rhetoric of the anticipation of the months to come. And it kind of begins right now with the talk of this ADP number. We got services jobs already kind of back in there, right, Teddy? That was a big number for services this morning. And I agree with you that we're going to see a big ramp up in expectation for those numbers in the months to come. We got about 10 million jobs to make up in the U.S. alone from where we were prior to COVID. And I think this is the first taste of kind of, some big expectations where tomorrow or Friday they'll be looking for like 600,000 jobs. And I know that's going to reverberate in terms of what you're talking about here with rates in a big way that hit the currencies. And of course, that's going to factor into the market too. I keep talking about just, an S&P sitting at all-time highs, basically waiting for, and I like to use the expression, rhetoric to become reality, right? The expectations to be met, what they have. And it's cool to get kind of the take on how you put things in the Forex market and the currency market, of course, because, I completely agree, man, in terms of, the expectations, how they play out, but they're going to be pretty grand over the next few months. And I think one thing's for sure, we're going to see some movement in these markets as we get some of these market forcing, economic indicating numbers out there.
Right. Well, what's a good sign, too, for unemployment is that, and this obviously affects the dollar. If we can get unemployment to start to fall, the dollar is going to start to fall off as well from this rally, and I can see it even like locally, like this year there's signs around the park districts, we're hiring lifeguards. Well, last year the pools were closed,
cool.
So kids, there's jobs now again for kids for the summertime, which that takes a little pressure off of the parents too, as far as providing for their kids for like their own extra expenses and stuff.
Totally.
So these trickling things, I think no matter what, we are going to see over the next couple months. The biggest thing is, can we sustain it throughout the rest of the year?
Because we got to sustain it for a while, man, right? To make up kind of what we lost, for sure. Right. Teddy, man, we appreciate the weekly update. We'll talk to you next Wednesday at 40 past the hour.
Thanks, guys. See you next week.
Thanks so much, man. Take care. Stay tuned, folks. We're coming right back.
Sharpening your skills as an investor is like getting better at playing a music